Hello traders, welcome to the 5% Traders Academy and welcome to this 1 week free class on forex trading. I still remain your coach Jeremiah Onwakeze. Before we begin today's class, I would like you guys to kindly subscribe to this channel and also hit the like button. So guys, please do that for me. Just hit the subscribe button and also hit the like button for this video. Alright guys, if you've done that, let's head over to the chat and begin today's topic. In this session, I will be teaching on two important topics, which are: the first one is understanding what candlestick is, and the second topic I'll be talking on is types of trading orders. Types of trading orders. So without any further thing, let's head over to the charts. If you all can remember, in the first or second video, I kept on telling you all not to worry on what is red and okay, let me bring out my arrow. So I remember I kept on telling you all, I told you all that you shouldn't worry about this red and green stuff you are seeing right here, that I would be creating a special video, a particular video explaining this in details. Okay, so this red and green stuff you are seeing on the chart right now is called candlesticks. They are called candlesticks. So this is what traders normally use to know when the value of a currency is actually going up or if it's actually coming down. As you can see from year to year it actually went up, and from year to year it actually came down. So it is through this candlestick that traders used to know when the value of a currency pair is either rising or is either falling. So there is something important that you should know. The candlesticks, this thing right here, the candlesticks you are seeing is what traders use to communicate with each other. You might not fully understand what I mean by this now, but I believe as we progress with the class, yes, you will capture what I'm trying to say. So this is what traders normally use to communicate with each other. If a trader have a firm understanding of what candlestick simply means, with the knowledge and the understanding of what candlestick means, it can help the trader to know when to buy or when to sell. So that is why every trader should understand what candlesticks is. So I'll just head over to explaining what a candlestick simply means. Yes, what a candlestick simply means. So guys, as you can see on the screen right here, you can see a red color candlestick and you can see a green color candlestick. So there are some forex terms that are used to call those things. So as you can see, each time the market is falling down, you would see the red candlestick, or you will see more of the red candlestick. Just for example, right here now, the market has been falling down. As you can see, you are seeing more of the red candlesticks than the green candlestick. So each time the market is coming down, you will usually see more of the red candlesticks, and each time the price is going up, you will usually see more of the green candlesticks. Okay, so like I said, there are names you call this red and green candlestick. There are some forex terms, forex name you call them. So the red candlestick is usually called the bearish candlestick. Take note of that. The red candlestick is usually called the bearish candlestick, while the green candlestick is usually called the bullish candlestick. So whenever, I want you to pay attention to this, whenever the price is falling down, it simply means that the sellers are in control of the market. It simply means that the sellers are pushing the price downwards. And whenever the price is selling downwards, that is whenever the price is selling downwards, whenever the sellers are taking the price downwards, you will see more of the bearish candlestick. That is more of this red candlestick right here. You will see more of the bearish candlestick. But whenever the price is going up, it simply means that the buyers are in control. It simply means that the buyers are in control. That is why, if you remember the if you remember the example I gave in the previous video concerning naira and dollar, you will notice when I said you will notice when I say the dollar is rising, the dollar is going up against naira, and you should buy dollars. Remember the example I gave, right? So as dollars is rising and people are buying dollars, it simply means that the buyers are simply in control of the market. So whenever the price of a currency is rising up, whenever it is increasing in value, it simply means that the buyers are in control, and it is the buyers that are pushing the price upwards. And so when the price is going up, you will usually see more of these green candlesticks and less of the red candlesticks, because the green candlestick simply means buy. The green candlestick simply means buy. It simply means that the buyers are in control of the market. And when you are seeing a red candlestick, it simply means sell. It means that the sellers are actually in control of the market. Okay guys, so that is basically how the candlestick look like. Don't forget this: the red candlestick is called the bearish candlestick, which signify sell, which signify that the sellers are in control of the market, while the green candlestick is called the bullish candlestick, which simply means buy. It simply means the buyers are in control of the market. So having said that, I'll be explaining to you guys on the formation of the candlestick, on how the candlestick form, because it is very important that you understand the candlestick. Okay, in my previous students I train, I usually tell them that it is better that I give you a firm understanding, so that they will always know the psychology behind things. So as you progress with this class, you will notice that I would always give you a very detailed understanding about some things in the market, about some movement in the market. That why I'm doing that is because I want you to capture the whole knowledge of what that thing is all about. So guys, I'll be teaching you how the bearish candlestick, which is the red, and the bullish candlestick, which is the green, I'll be teaching you how they actually form. I'll be making mention of some things. If you're actually jotting now, you can jot them down. So okay, maybe I've not said this. I would really advise you all to have a trading note whereby you jot your lessons, every lessons you are learning from each and every of this video. I would love you all to have a trading note. It is most times called a trading journal. So I would love you guys to have a trading journal whereby you write your experiences, you write your lessons. Whenever you take trades, you jot them down. Did you come out in the trade with profit? Did you come out of the trade with loss? So I would love you all to have a trading journal. Yes, because one of the things that actually helped me in my journey in forex trading at my early stage was, each time I study the chart, each time I do my own practice, I have a book whereby I jot my findings, my experiences, the thing I learned from the chart. Okay, so if this has helped me, it should also help you, and that is why I am recommending that for you. So enough of that talk. I said I'll be explaining the formation behind this bearish candlestick and behind the bullish candlestick, and I said I'll be mentioning some things like the opening of a candle. I'll also be talking about the closing of a candle. I'll also be talking about the body of a candle, and I'll also be talking about the wick of a candle. The wick of the candle can also be known as the shadow of a candle. So I'm talking about these four things. Now the first thing is the open of a candle. Now I'm majorly explaining the formation of a candle, how a candle, that is how a candlestick actually form, how a candlestick actually open, and how a candlestick actually close. So this is what I'm going to be explaining right now. So for a bullish candlestick, okay, let me start with a bullish candlestick, which is this green candlestick right here. Remember I said when the bullish candlestick is when you are seeing more of the bullish candlestick, it simply means that buyers are in control. It simply means that buyers are pushing the price upwards. And remember, if something should go up, it will start from down and push up, isn't it? If something is to go up right now, it will start from a particular level and push up higher. So that is also the same thing in the candlestick. Whenever the candlestick wants to open, okay, whenever the candlestick wants to open, it starts from right here, down here, and this is the opening place right here, and it pushes higher. So it opens here and pushes upward. Okay, if I should use this example right here, if I should use the example right here, for the bullish candlesticks open from here and pushes up higher. It opened from here and pushed up higher. It opened from here and pushed up higher. Because of the price is actually going up, it will start from a particular level and go up higher. Okay, so back to the first candlestick I was using. So this is the opening price of the candlestick right here. This is the opening price of the candlestick right here. And when the price opened here, when the candlestick opened right here, it pushed up higher to this place. Okay guys, it pushed up higher to this place right here. So this is the opening of the candle. Okay, this is the opening price of this candlestick. Let me use a line so that I can explain better. Okay, so guys, this place right here is the opening price of this candlestick at the price of 1.08971. But let me not bore you guys with the price. It's kind of boring just repeating those prices over and again. So this is the opening price of this candlestick, and when the candlestick, this bullish candlestick, opened, it pushed up higher. It pushed up higher right here. So the reason why you are seeing this colored part and this tiny part, this tiny part is called the shadow, or it is also called the wick. And why this colored part you are seeing right here, this colored part from here to here, is called the body of the candlestick. It's called the body of the candlestick. If I should interpret this candlestick right here, this bullish candlestick for you, if I should interpret it for you, I'll tell you that the price opened, the candlestick opened at this price. The buyers pushed price up to this price level. Let me draw another line. Up to this price level, and at the end of the 1 hour, because this is a 1 hour candlestick, as you can see right here, this is Euro USD, the 1 hour candlestick. So at the end of the 1 hour, what this 1 hour simply means is that at every 1 hour, each of this candlestick will be appearing on the chart, either green or either red. At the end of 1 hour, you would always see this candlestick. If I switch this time frame right now, maybe for example I switched it to a 30 minutes, it simply means that at the end of 30 minutes you would be seeing either green or a red candlestick on your chart. But when I get to the lesson, to the class, because there's also a special video I have created whereby I will talk more on whereby I will talk on time frame. So you don't have to worry about this time frame, about this 1 hour or 30 minutes. You don't have to worry about that. I've created a video that will give you a better understanding about that. So over to the example. I said if I'm to interpret this bullish candlestick, this green candlestick, I would tell you that the price, this candlestick opened at this price level right here. The buyers pushed price to this point, this price level right here, but at the end of the 1 hour, the buyers closed the price at this place, right here. So I will draw another line for you right here, at this place right here. So this is to explain to you that the beginning of the bullish candlestick is called the opening. At the place where this colored candle, where you can see more of this colored, this green part, where you can see, as you can see, this is the green part. So this green part is called the body. It's called the body, and this line, this thin line, is called the shadow or the wick. So at the end of the body is the close of the candlestick. Remember, I said I'm going to be teaching on the open of a candle, the close of the candle, the body, and the shadow, or the shadow is also known as the wick. So at the opening price of the candlestick is called the open. At the end of the body is called the closing price of this particular candlestick, and this colored part is called the body. Now this shadow right here, or wick, this thin line, is called shadow or wick. So the reason why there is a shadow or a wick on every candlestick is because of the buyer. If it's for a bullish candle, the buyers tried to push price higher to this place. This is the highest point that the buyers, for this candlestick, this is the highest point that the buyers took price to. But at the end of 1 hour, this is where they were able to close the price. Okay, this is where they were able to close the price. So I'll just delete these things and explain on another candlestick. Okay, so this is another bullish candlestick right here. Remember, I said when a price when a bullish candlestick opens, for a bullish candlestick, the price open at a particular level and push upward because of it is rising, because of the buyers are in control. So guys, if I'm to interpret this candlestick for you right here, this is the open price. Let me bring out a line. So this is the open of the candlestick. The candlestick opened at this price. This is the highest point right here that the buyers took price to. Okay, so let me put my line right there. This is the highest point. The tip of the shadow is the highest point, and this colored part is called the body. The colored part is called the body. So the end of the colored part is called the closing price. That is where the buyers were able to close the price at the end of the 1 hour. So basically, this is the open, this is the body right here, this is the closing, this is the close, and this thin line you are seeing right here is called the shadow. Okay guys, so I haven't explained this on the bullish candlestick, that is the green candlestick. Let's go over to the red candlestick and explain. Now remember what I said about the red candlestick. Whenever you are seeing red candlestick, it means sell. It means that sellers are in control, and if sellers are in control, it simply, remember what I said, when the price is coming down, you will see more of the red candlestick. So if the sellers want to push price downwards, it means they will push price from a particular top downwards. So a particular top downwards. For the bullish candlestick, buyers will push price from a particular bottom upward, but for the bearish candlestick, is from a particular top downward, from a particular top downward, as you can see right here too, from this top downwards, from this top downwards, from this top downwards. So that is basically how the bearish candlestick is. So guys, this is the open of the candlestick right here. this is the open of the candlestick right here, and the sellers push the price downwards. The sellers push the price downwards. So guys, if I'm to draw my line, this is the open right here. Okay, this is the open. Now this is the lowest point. The tip of this shadow, the tip of this wick is the lowest point that the sellers took the price to. So I'll put a line there. Okay, and this colored part you are seeing is called the body of this bearish candlestick. And at the end of the 1 hour, this is where the sellers were able to close the price. Remember what I said about the close? I said the close is the end of the body. So this is the end of the body. So this is the closing price. Okay, so this is the closing price of the candlestick. So if I'm to interpret this candlestick for you right now, I'll tell you this is the open price, this is the open price level, this is the body, this thin line is called the shadow, this tip right here is the lowest point sellers took price to, but at the end of the 1 hour the sellers close the price here. So this is the close. So guys, this is basically how to interpret the candlestick. This is how the candlestick forms. Yes, and please bear it in mind, we don't say green candlestick or red candlestick. Why I'm still using this term is because of most of you watching this video might be a beginner, might not know much in the forex market. So as we progress with the class, you will be hearing me saying the bullish candlestick, which I said earlier the bullish candlestick represents the green candlestick, and you will hear me say the red candlestick, which simply means the bearish candlestick. Or you might be hearing me saying the buy or the sell, the buyers or the sellers. When I'm talking about the buyers, I'm talking about those persons, those traders that are pushing the price upwards. Yes, because it is the buyers that push the price upward, and it is the sellers that pushes the price downwards, So you will hear me using this term often and often again. So I want you all to understand this term and put them in your heart. Okay, so I'll just be deleting these things. So having explained what candlestick simply means, having explained the formation behind a candlestick and the type of candlesticks, I'm done with the first topic. Okay guys, I'm done with the first topic, which is understanding what candlestick is. So I'll be moving to the second topic, which is types of trading order. Okay, if you remember in the first video or the second video, at least the previous videos, I said something, I think it's in the first video. I said in the forex market, what we basically do is to buy and sell. We basically buy and sell foreign currencies. Okay, so majorly in the forex market, all you are simply doing is buy or sell. Okay, so as you can see on the top of my screen, both the right top and the left top, you can see buy and you can see sell. So guys, there are types of trading orders. There is what is called buy and sell order, and there is also what is called limit order. Or I'll use the word, there is what is called execution order, and there is what is called the limit order. Okay, I will explain them one by one. Okay, let me use the simple term buy and sell order. Okay, there are times you hear me say, or you hear some other trader says, I have placed a buy order, I have placed a sell order. What this simply means is that they actually placed a buy or a sell. Remember in the video I talked about where I talked about broker, trading broker. And remember what I said about trading broker. A trading broker is an intermediary that helps us execute our trade. That is, we instruct our broker, we give our broker an order to buy or to sell for us in the forex market. And nobody have a straight access to the forex market except through a broker. I believe you all still remember these things. Okay, so remember what I said, we give an instruction, an order to our broker either to buy or to sell. That is where the word buy order or sell order comes from, because it is simply giving an order to your broker to buy or to sell. So whenever you place a buy order or whenever you place a sell order, if it's a buy order, it just simply means that you placed a buy. You have ordered your broker to buy this currency pair for you. And whenever you place a sell order, it simply means that you have ordered your broker to sell this currency for you. Okay, there is also an order that is called stop loss order and take profit order. I believe in one of the previous video, I think understanding the MetaTrader 5 interface, yes, I talked about stop loss and I talked about take profit order. Okay, and if you guys remember, I said in the stop loss order, it is an order you give to your broker that whenever a trade is not going in my direction and I'm already making loss, please close this trade at this particular price level. Okay, remember I said that if you still want to go back to that video, the video class is on understanding MetaTrader 5 interface. I believe I explained well about the stop loss order and the take profit order, but I'll still talk a little bit on it so that you can have a firm understanding. So a stop loss order, for example right here now, you placed a buy order around here. So remember what I said about forex market. Whenever you enter a trade and the trade is moving in your direction, you begin to increase in profit. Okay, you begin to increase in profit. And whenever you enter a trade and the trade is going against your direction, you begin to make loss. Now this is what I mean. If you should enter a buy trade around here and the price starts to, remember I said when the market is going up, the buyers are in control, remember? So if you should enter a buy trade here, right here, to join other buyers, and the price start going in your direction, if you check your capital, you will see that you are increasing in profit. Okay, but whenever you enter a buy right here, and instead of the market to be going in your direction, the market start falling, if you check your capital, you will notice that you are making losses in the market. Okay, so instead of you making too much loss and end up losing all your capital, there is what is called stop loss order. It is an order that you give to your broker that whenever a trade is no longer going in my direction, it's no longer going in my favor, please close the trade for me at this particular price level. So that is what a stop loss order simply means. And a take profit order, I explained what a take profit order is. I said a take profit order is an order that you give to your broker that whenever a trade is already going in my direction, whenever a trade have start moving in my direction in line with my trade, please close the trade for me in profit at a particular price level. So for example right here, you entered a buy right here, you can set your take profit here, which means that when price gets here, the trade will close, your broker will close the trade for you in profit of whatsoever amount of money. you set. Okay, so that is basically what buy order simply means. The sell order simply means the stop loss order and the take profit order. So the last order I'll be talking about is about buy limit and sell limit. Okay, it's about buy limit and sell limit. Now, you might not really be using the buy limit and sell limit. There are some traders that use it, there are some traders that don't use it. Now, I'll tell you the reason why traders normally use buy or sell limit. For example, if you are the type of trader that have all the time, like for example you are not doing anything, or you are a full-time trader, that is, you are not working or you are not schooling, you are not a student, all you do every day is to trade, you can have your whole time to analyze the market and spot buy and sell opportunity. Okay, and as soon as you're on the chart, all you have to do is to click buy and the trade will start going in your favor, or you click sell and the trade will start going in your favor. However, there are some traders who are students and there are some traders who still have other works. Probably they are career persons and they are into other career paths. Okay, that they will not have all the time to stay on the chart and spot buy or sell entry. So for example, okay, for example right here, I'll be giving an example. I want you to watch closely. For example, after doing your analysis, okay, I'm giving an example right now. After doing your analysis, and through your analysis you expect the price to start falling from here and fall downwards. You expect the price to start falling from here and fall downwards. Okay, so for example, okay, let me make it clear. I'm trying to use the right words so it will be clear. For example, right now the price is currently at this place. I'm giving an example. For example, all these candlesticks are not reflecting. Okay, let me make it this way. Okay, for example, this is the candlestick right here. Okay, this is the candlestick right here, and you expect that once price gets to this place, price level, it will start falling downwards. So as a full-time trader, you might have all the whole time to watch your chart, and as soon as it gets to this place, you then enter sell. Okay, but there are some traders that they have other things doing and may not have the time to watch and wait until the market gets here before they place their sell order. Okay, so there are some traders that don't have this particular time. So instead of them missing out in the trade, that is to say, instead of the price getting to this place, okay, and end up falling down, and the trader end up missing the trade because of the trader has other things doing. So instead of the trader missing out in a trade like this that could give him a good amount of money, that is what is called the buy and sell limit order. It's just an instruction, it's an order that you give to your broker, that whenever the price gets to this particular level, enter a sell or enter a buy order for me. It depends on your analysis. Okay, it depends on your analysis. So guys, I'll give the example once again. So for example, the price is currently here and the price has moved here. So you expect that in the next few hours the price will start dropping from here. the price will start dropping from here. But you, because of your busy schedule, you know that in the next few hours you might not be on the chart to enter that sell, to manually click on the sell button. Okay, so instead of you missing out in a trade like this, you can enter what is called a sell limit. Okay, you can enter what is called a sell limit. Can you see it right here? See where I clicked on this stop right here? So you can tap here and enter what is called a sell limit order. So a sell limit order is an instruction you give to your broker that whenever price gets to this particular place and I am not on my trading chart, enter a sell trade on my behalf. So it's just an instruction that you give to your broker that I don't know the particular time price will get to this place before it start dropping, but as soon as price gets here, please, I want to enter a sell and I'm currently not on the chart. Enter this sell trade on my behalf. Okay, so guys, if you actually use the sell limit right here and you can see the price gets here and you can see the price went down. So the advantage of this limit order is to help traders not to miss out in trading opportunity, because every traders are not the same. Not all traders will have the whole time to be on their chart, and so because of one busy schedule, for example, the person is a student, a university student, the person have to leave for class maybe 8 a.m. and coming back around 3 to 4 p.m. in the evening, you will notice that the trader can be in a lecture and there might be some trading opportunities that the trader can miss. Okay, so what the trader have to do is maybe when he wakes up in the morning and after doing the analysis, and the trader after the analysis knows that the market will start falling from this place, but at the same time the trader don't know what time, so the trader can't be checking his chart always because of he has other things to do. So what the trader will do is to set a sell limit order. This sell limit order is an instruction that you give to your broker. Enter this trade on my behalf. I will not be online. So either you are online or you are offline, that is when you have internet connection or when you don't have internet connection, or even when your phone is switched off. Okay, your broker will enter that trade on your behalf, and whenever you come online, you will see your trade running in profit. That is if the trade is going in your direction. Okay guys, so if you are looking for a buy opportunity, for example, you know that the price will be buying from here upward, okay, but you don't know if you actually be on the chart by the time the price start rising, by the time the price start buying, you can simply set a buy limit. Okay, you can simply set a buy limit. Okay, so this is a buy limit right here. You can simply set a buy limit right here, and your broker will enter the trade on your behalf so that you will not miss that trading opportunity. So guys, we've come to the end of this class. I believe you all learned something. I believe you all learned a lot of things from this video. So what I want you guys to do is to watch the video over and over again, gain mastery, gain understanding. So guys, we've come to the end of this class. I would see you in the next video class. Bye.